You are listening to Small Business Straight Talk with your host, Amber De La Garza. Amber is a sought-after coach, trainer, speaker, and writer who gives small business owners the straight talk on productivity, time management, business systems, leading your teams, strategic decision-making, and mindset. No BS, fluff, or overused jargon. Just actionable strategies to get results and succeed in business. And here is your host, Amber De La Garza, the productivity specialist.
Welcome, and thank you for listening to the Small Business Straight Talk podcast. Today is episode 345, Understanding Your Business's Financial Health with Hannah Smolinski. If you're a small business owner who wants to learn effective business strategies, improve time management, and elevate productivity to maximize profit, reduce stress, and make time for what matters most, then you're in the right place, and I'm so glad you've joined me. I am so looking forward to you meeting our guest, Hannah. I'm really excited because the value that she brings is incredible. Her and I have met many, many years back. I think it was 2017 we met at a conference, and we have worked with the same clients over the years. And so we have been in each other's orbits. I was on her podcast, and now I have the great honor of hosting her on our podcast here at the Small Business Straight Talk. Hannah is a virtual CFO agency providing small businesses with the financial clarity and profit maximization strategies. Her experience working for one of the world's largest accounting firms inspired her to make corporate expertise accessible to small business owners through Fractional CFO services. She's also the host of a YouTube channel with over 80,000 subscribers and uses the platform to help small businesses achieve financial success. To that point, we are going to be linking out into the show notes several videos that I highly recommend you watching. We're going to talk about some of those, throughout our conversation because I actually share specific episodes from her YouTube channel with several of my private coaching clients to help them because she answers these questions so thoroughly and is such a great resource. In today's conversation, you will discover the financial support options available to you as a small business owner, what size a business owner needs to be to hire a fractional CFO, the roles of a CPA versus a fractional CFO, the biggest financial challenges small business owners face, how to best use business credit, ways to build credit in your business, our differing opinions on the Profit First method, the importance of educating yourself on the financial health of your business, and so much more. We do cover a lot of topics in this interview because I got her to do the interview and I had so many random questions that I knew would be helpful for you, the small business owner. Before we dive into this conversation with Hannah, I want to invite you to take my Next Level Business Owner quiz. If you are looking to take your business to the next level, whether that is how you are leading your team with more financial profits, to reach a bigger audience, whatever that next level looks like to you, I encourage you to take this quick 3-minute quiz to find out what is holding you back from getting to that next level and to be able to provide you with a curated, personalized playlist of specific episodes that address those challenges. You can get all that by heading on over to amberdelagarza.com/quiz. And now, let's dive in and meet our guest and get to the straight talk. Welcome to the podcast, Hannah. How are you today?
I am really good. Doing really well. How are you?
Good. I'm so glad to have you on the podcast. You and I go way, way back.
We do.
I think,
love it.
2017?
Yeah, which is funny that that's way, way back, but it feels so long ago.
Right. And we also share clients. So we've had the opportunity to work with the same clients and maybe after this podcast, many more clients together. But I wanted to have you on I first want to just speak to my own personal experience with you. I know that the clients we share love you, but I also want to talk about your videos. So Hannah has an amazing YouTube channel, and I'll be cooking. I'm a nerd. I'll be cooking dinner, listening to Hannah, and watching these videos that I think are so valuable, like action packed, very like digestible, right? Like finance can be a big thing, especially in business. And I think you've just done a really wonderful job breaking down things that most business owners either don't know they have those questions and should, or they do have those questions and you're answering them. So we'll be sure to link out to Hannah's YouTube and her podcast as well. I was a recent guest. But thank you again so much for being here. Hannah, you are we're going to call you a fractional CFO, but before we recorded, we were like, is it a virtual CFO? Is it a outsourced CFO? And you said you use those interchangeably. So I'd like you to speak to that and also share with us, how'd you become a fractional CFO?
Sure. Yeah. I mean, there's, this outsourced, fractional, virtual, that is basically in most people's language, that's going to be just anybody who is not a full-time CFO working in a business, and you're hiring outside of your own business. It's not an employee. You're hiring a contractor to come in and help you, or some type of vendor, if you hire a company, anybody coming outside of your company to come in and help and act in that CFO capacity, whether it's just really tiny for like a project, or it might be more of that ongoing support. I call those pretty interchangeably, like virtual, which just means like they're not physically there maybe. And outsource is just anybody that would be outside of the company. And then fractional really is just that idea that you don't need a full-time person. So it is possible to have an outsourced CFO that might actually be full-time in your business, but I use them mostly interchangeably, because usually if you need a full-time CFO, you're usually hiring them as an employee.
In-house,
so, yeah. And you need to be a pretty decent size before you need a full-time CFO in the business. Like we usually don't see that until a business is reaching, $50 million plus, usually in annual revenue. So sometimes they need one earlier, especially if they're like fundraising or something like that. But usually you need to be a decent size before that.
And at what size does a business owner need to be when they hire a fractional CFO?
Yeah, I mean, I think that can come at different levels. Usually it's when we see businesses that really are looking to grow. So that's like one of our big things. If you don't need to grow, you probably don't need a CFO. But if you're looking to grow your business, usually we see the needs starting in the high six figures. So usually, I mean, sometimes we see them really starting to need advice around the $200,000 to $300,000 level, but they're not quite ready to have that ongoing support of a CFO. And really, it's too expensive at that point for most businesses to really be investing at that level. So they usually can get some spot help at that time. But like the retainer, having somebody help on a monthly basis, we really see that kicking in that high six figure, over $1 million mark. That's usually where we start to see businesses really needing some support more continually. And then sometimes people can wait and they don't need it until they reach a couple million. It kind of just depends on the complexity of the business, and then also like the founders and maybe any leadership team members that they have and what their skill sets are.
Yeah, excellent. And what are the services of a fractional CFO? So how would a business owner know that they need that type of support? Like what is that skill set gap that would be filled?
Usually businesses get to a certain point because they have the historical financial information. So they have a bookkeeper, or they have an accountant, or somebody who's on their team that is taking care of the financial transactions on the day-to-day. But they start to have questions about what to do next that relates to the finances. I mean, everything a business does is going to have some kind of financial impact. And it starts to get to the point where a business owner doesn't fully have a full grasp on the actions that they're taking and how it'll affect their future business. So it might be they want to hire a new person and they don't understand the financial impact on that, or they want to start offering benefits to their employees and they don't know what that could potentially look like, or they are looking for more like decisions in the future. Maybe they want to offer a new service or a new product and they're not sure about the profitability of that and what that could look like for their business. Even things like, do I buy this truck or do I lease it? There's lots of things, financial decisions that businesses are making all the time, and they kind of need to see it all like come together into a financial plan, and they go to their bookkeeper, and their bookkeeper's like, sorry, no, I'm just classifying transactions based on what you charged on the credit card. Like I'm not going to be planning your next year for you. So what the CFO does, and what our services really are about, like taking what the business owner is wanting to do and putting it into a financial plan based on past financial information, but also conversations about the future, understanding the business model. What does that growth look like? What do they want to be accomplishing and putting it into a financial plan for them, which is in the form of like a forecast, a financial model, and then keeping up with them and talking to them regularly, and either being on their leadership team, sitting in leadership team meetings and actually like being part of the team, or just having a little bit more of a lighter touch point, but always having some kind of monthly cadence of conversations with clients, and being there to be supportive to them when they have to make big decisions.
Absolutely. And then can you just briefly talk about the role of a CPA then? So we have bookkeeper, we have CPA, and then we have CFO. So I just want to get a lay of the land of all the financial support.
Yeah. So, I mean, you can have a CFO who is a CPA. So I'm a CPA. That's just a certification. You can have a CPA who does bookkeeping. You can have a CPA who just does tax returns. You can have a CPA who is an actual tax advisor that will help you do more like complicated tax planning. But a lot of people, when they think of, I have a CPA, that usually means that they have somebody that does their tax return. It's a very compliance-driven role where you have to file a tax return every year. They're the person that does it. I have a CPA, quote unquote. I mean, for you guys aren't watching on video, but like I'm using air quotes. I have a CPA. That usually means I have somebody that does my tax return. Sometimes that person will also be a person that the business owner can sit down with on an annual basis and maybe have some conversations about saving on taxes, a little bit of tax planning. Usually, a lot of CPAs don't have the time to even have those conversations with clients. So there's a lot of frustration between the business CPA relationship, or business owner CPA relationship, because oftentimes business owners think that they've hired a CPA, so they think they've hired an advisor. But the CPA is like, no, I've been hired to do a tax return. And then actually the tax return there's no advising that happens on a tax return. It's data input into forms that goes to the IRS. It's very transactional. It's almost, that will get to a point where it's completely automated. I'm positive, where we're not going to need that. But that's where there can be a lot of frustration, where people will be like, oh, my CPA is not doing anything for me because I thought I hired this person to be part of my team, and they're just not that person. So you really need to be clear on that. If you think you're hiring an advisor, understand, is that part of the engagement or is it not? So we oftentimes have people come and use us because they thought they were getting a business advisor when they hired their CPA, but that's actually a separate role.
Yeah, I have found that to be true too. And really, CPAs that are doing taxes are so deadline driven, their book of business, that unfortunately it doesn't always allow for that advising as you spoke to. Yeah. All right, great. I think another start off question would be, what do you think is the biggest challenge small business owners have in regards to finances? And this, I know there's probably many, but I mean, is this mindset? Is it disorganization? Like, I just want to know, from your experience, you're in and out of small businesses all the time. What are some trends that you're seeing?
I think that probably the biggest thing it's so interesting because you have so many different personalities in people who run small businesses. We were talking about this briefly before we started recording. You have people who are very risk averse, and then you have people who are very risk comfortable, whatever the opposite of risk averse
Tolerance,
is. Tolerant, yes, tolerant. So I was initially thinking like, cash and managing cash is one of like the biggest challenges for a lot of small businesses. But then I have tons of clients who hoard cash. They have tons of it because they're very risk averse, and like having cash is not a problem. They've stored it up over time. But that might be a problem too. I think what we could say is like using cash as a tool to leverage to grow your business, where you have enough of it and you have enough of it in the business, but you're also leveraging your cash if you're like on that side of being, having so much, where you could be growing your business faster if you were getting it out of savings and actually putting it to work for you and making strategic moves and actually being bold with your money. So I do feel like there's this balance between like the people who never have enough and they're always overspending and not kind of having that buffer versus the people who are, holding on to so much and maybe not accelerating the growth that they'd like to see because of that like fear.
Yeah.
So, I feel like just kind of understanding and harnessing the power of cash is probably like
I actually love
number
that
one.
answer, right? You gave both extremes that on the extreme could be detrimental to the business. And what means to me, what I see as the happy medium is an advisor like you that says, for your business, for your number of your revenue and your number of team members you have and all of this stuff, here's an ideal number. But when someone doesn't know what that ideal number is, they may assume it's this big dollar amount in savings.
Yeah.
And the other one's like, I've made it thus far. We're going to keep going. So let's just keep doing this, right?
Yeah. And I mean, on the like when you have too much cash, which is fewer people, let's be honest, there's fewer people that have more cash than they probably need. I mean, we've had conversations with clients where we're like, well, what are your goals? Because if your goal is actually to retire in 5 years, you don't want that money actually sitting in your business. If it could be leveraged and you take it as a distribution, you actually go and invest it into your like personal retirement accounts where you could have that money invested rather than having it sit in even a couple percentage, savings account that you're getting a little bit of interest on. What do we need to do to like actually help you achieve your goals? Or if you are, short on cash, how can we look at the whole business and say, like, what do you actually need to have? And then what is excess that you can be more discretionary with? So yeah, we definitely, it's very, 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 every time we meet with a client, it is a conversation of cash.
There you go. And we'll actually link out to a video that I did already watch about how much cash do you need to save in your business. I don't know if that's the exact title, but I'll find the video and make sure we link out to the show notes. But you went into detail about this and what are the different things to be thinking of, and that every business is a little bit different on what that target dollar amount is to keeping cash.
Yeah, but I think it's called months of cash.
Months of cash. Okay, good. You made it easier for me to go find that video. But you did just bring up distributions, which brings up another topic I wanted to talk to you about today, and that was owner's pay, distributions, the ways in which an owner can get paid. And I'll hand it over to you. What advice do you have? And maybe you should just start off with what are the ways an owner can get paid?
Yeah. Well, without getting like too complicated for a podcast, because there are many videos I have on owners distributions and pay. And I would definitely recommend people to go and watch some of those, but it kind of depends on what type of entity you are. You have to start there.
Mm-hmm.
Are you a full like pass-through entity where you are only getting paid through distribution? So that will be our sole proprietors and our LLCs that are taxed as a sole proprietor, and then partnerships. So a lot of those, they're just going to take all of their money that they're going to get paid from the business, literally comes from the profit of the business, and they just take some kind of draw. And, whether that's a regular draw or it's a quarterly or whatever, that's how they get paid. And then if you are maybe an LLC but taxed as an S corporation, which a lot of us are, that's been advised, from the past that is the ideal tax situation. It's not always the case. So just side note,
to know.
Not always the case. But a lot of us have been elected into S corps. Then you have to pay yourself what's called a reasonable compensation. That's the IRS term of reasonable compensation, where the IRS is saying, you have to pay yourself, because it's a little bit of a tax advantaged position, that the profits you don't have to pay self-employment tax on. So they say you can't just pay yourself $2 a year in annual salary, quote unquote, and then take all of your distributions in that tax advantaged way. So they want you to pay yourself a W-2 wage. So you're going to get a normal paycheck like all your other employees. You would pay yourself a reasonable compensation in W-2, and then you can take an additional amount in draws. Now, how much you pay yourself is going to be really dependent on how profitable your business is. I am big on making sure that people understand that their profits in their business have to do a lot of jobs for them. So the profit of your business has to pay your taxes, for one, because where else is that money going to come from if it doesn't come from your business?
Right. Your personal
So
taxes for
yeah,
many of us. Yeah. Because
yeah,
it gets
your
passed
personal
through.
taxes.
Mm-hmm.
When your business makes money, you have to pay taxes. So
Mm-hmm.
I see people who try to like not make money so they don't have to pay taxes, and that makes no sense whatsoever. So make a bunch of money and then pay taxes.
Right.
Like,
Right.
just I'm all about making a bunch of money and then you don't have to worry about it so much. So when you make money in the business, you have to pay your taxes, and then you also need to think about reinvesting into the business. So any extra cash that the business is generating, that's your profit, the profit that comes in from your business. That's the money that, if you want to be saving, or you want to be maybe hiring that next employee that you don't have the money for right now, you need to think about what are the things you need to be doing. And then that's also where your distributions come from. So
Mm-hmm.
you can't just be like, oh, I made $10,000 in profit this month, I'm going to write myself a $10,000 check, because that's how a lot of people do it. But then they get to the end of the year and they realize, oh, they've spent all their money and they don't have any extra money in the business to make any decisions and to grow the business or invest or do anything else.
Or ride out a hard time where it kind of
Yeah.
gets slow or anything.
Yeah.
With regards to business owners taking home pay, if they're not taking home regular pay, do you really even consider that there's profitability in the business? Like, is it a healthy business if they're not taking home pay?
I think there's going to be like different seasons. I think, when a business maybe first starts,
Right.
you are probably any profit in the business you might be choosing instead of distributing it to the owner to actually,
That's what I
build it
did.
up. Yeah.
Absolutely.
Yeah. I mean, like to have some, some savings, you've got to build that up from somewhere. So it's either the business owner can take the money out or they can leave it in the business and reinvest into the business. And reinvestment, or just saving into the business, I would call that somewhat of a reinvestment. I think if you are getting to the point where your business is not profitable, you're not taking money out years and years and years, well, really more than a year, and you are already established and you're not able to pay yourself, my thinking is that you've actually not designed the business to be able to support your cost.
Mm.
Because we as business owners are a cost to our business. If we're not paying ourselves, it actually doesn't benefit our business. It means that you haven't priced appropriately, because
Yeah.
you're not considering the fact that, like, what if you actually need $10,000 a month to run your household? You're not free labor. And
Right.
sometimes business owners are thinking about themselves like, oh, I'm free labor, I'll do all the work and then I'll get paid and then I'll pay all my people. And then at the end of the day, no money is left over. That's because they've priced incorrectly.
Yeah.
So it's a common problem. And there's sort of this, I don't know where this came from, but almost this sort of like hustle culture, sort of like, I will like grind it out with my own business for a long time and I won't take a paycheck and I'll like just, work really hard for the business. But if you're not taking a paycheck because there's no money, then that means that you are not pricing appropriately.
Yeah.
And
Yeah.
that is a huge problem.
It is. Or there's pricing appropriately, or even if your pricing is good, then your expenses are too high. You've hired too much. Like there's a lot of different factors there. And you were speaking to like the hustle culture. And what I see too is business owners not valuing their worth.
Yeah.
They are the most important asset many times in the business, most times in the business, but then they're not treating themselves that way. They're willing to sacrifice all of it. And then this is where that intersection between the financial and productivity come in, because now this is affecting with your mindset. Like this is like a short road to burnout if you're not, being able to support your household. If you are stressed out because it's affecting your personal finances, how are you able to show up your best in your work and every single day, when the carrot of making money and why we wanted to get in, one of the reasons we all wanted to get into business, keeps getting pushed down the road? Burnout, overwhelm, exhaustion comes from that. And it affects us on all levels, personally and professionally.
Yeah, 100%. I think that we also, like, owning a business is inherently more risky than being an employee. And I think that this is like a personal philosophy. I think I should be making more money as a business owner than I would be in an equivalent job to whatever I would be doing if I didn't have my business.
Yeah.
It's like I have a firm belief because I think that like I've taken a very risky step into doing this. And so that kind of helps ground my salary expectations and my compensation expectations to come from my business. Like, yeah, there's always going to be times where like maybe, if the business is not doing well, then maybe I have to like pull back a little bit. But when I kind of look at it for myself and I look at this kind of for other businesses that we're advising, like we want you to be at a place that you, are not taking a financial hit by running your own business. If anything, you're creating ways to create more wealth overall by making this kind of riskier choice to go out on your own. And, that can take years to kind of develop. But I think that kind of that anchoring for me of like, I should be getting paid more kind of helps me realize like, oh, I do need to be thinking about how much I should be paid. So then it kind of works into the structure of the business model and we have to make it work.
Yeah, I agree. And something else that also goes through my own head was, like I said, when it was early on, there wasn't money to take a salary that was even comparable to the salary I left in corporate, right? Like it took a while until you even broke even. And then then your skills have gotten better. You're doing so much better. Like you should absolutely be in charge more. So like when I get paid more now, I'm like, because I was owed. Like that reinvestment wasn't just like a gift to the business. Like it needed it. It was at that time. But like, what's the ROI? Like down the road, my salary should show that I was working under my wage that I should be earning.
Mm-hmm. Yeah. I think sometimes people think they're building towards like they're creating value, that the business is creating value, and that's how eventually maybe they'll get paid back. But I also kind of caution that in some ways that we need to both be, yes, thinking about your business is creating value and maybe it'll be a valuable asset you could sell to somebody else one day. But you don't want to just have that be what you're working towards alone. You still kind of need to have what is the regular compensation? Because really, we all have lives that we need to fund. Yeah. I mean, like I don't have a spouse that is, I don't like I'm doing it on my own. So like I have to make money, and I can't rely on that. And even for people who do have spouses or partners, life partners, whoever is like in their household, like they still should want to contribute to like what is going on there. And I think you should do it if you have a business and it has cash flow. You need to be able to compensate yourself.
Yeah, I mean, this isn't directly in the line of financial, but I know you, so we're going to have this conversation that, if your business isn't able for you to bring home revenue, it affects the support you get. And as a business owner, we need support, from our family members or a significant other. And, I think back to my own journey, we knew there was going to be an initial sacrifice of my salary and that I wasn't going to make the same amount of money. And I had just had a kid and our life completely changed. And he's been supportive, whether I made money or not. But at some point, like that generosity of my husband supporting would have gone away. Like as great of a guy as he is, you know what I'm saying? Like, and then so now that would be creating that unwanted stress that then affects business too. That like you want to get the buy-in, or even if you don't have a significant other, like you want to feel like you can stand on your own 2 feet and have that independence and security, because it also affects how we get to show up in our business. So for various ways, the dollar's good to pay the bills, but the money actually represents so much more, I believe, as well.
Mm-hmm. Yeah. Yeah. I mean, having freedom and flexibility with actually having a business that does generate cash is good in so many different ways. So I think, there can be a mindset of maybe just thinking like, oh, I don't need money because, I'm okay at home, or like I have enough and I don't really need to push for more. And it's not about, and maybe like a lot of us, and I know that like women potentially sometimes struggle with this more than maybe men do, but I think that there's this idea of like, I shouldn't want more sometimes. And it's not really about like, oh, let's just go and like grow it and, have tons and tons of money. There's nothing wrong with that if that's what you want. But there's also like, and I like money does create freedom and flexibility.
Yeah.
And that's what I think entrepreneurship is really all about. So like if we have money, we have the opportunities to do other things, whether it's taking the money home or it's doing other things in the business, if it's starting a new business, if it's buying something additional, like it just gives you so many options. That's why I like people. I love people to have cash flow, and I love people to have that, because really it's freedom and it's flexibility.
Yeah. Yeah. I mean, I'll just speak a little bit to that myself, is that the money that I get paid, it's not just to keep the household. Like, I feel like it's a way to diversify your investment. Like, as business owners, we see it as this investment. Our business is our asset, but we can't just have one asset. And so when I've had abundance of money to flow into the household, it has allowed me to diversify in other assets, which then in return, when those work out, has created less stress and pressure to make X dollars in the business, because you've now diversified how your money is working for you, and that it's not just strictly coming from the business. And that didn't happen until the last few years, where I zoomed out and I was like, no, like, I think it was like hitting my 40s. I was like, okay, business is great, but like, this cannot be my only place where money's coming in and assets are being created. So how can I draw that out and then do that elsewhere in different ways?
Yeah. I mean, I'm in a bunch of like entrepreneur communities, and, it's interesting to see people who are, ahead of me, quote unquote, in business, and the different things that they've invested in or done with their additional, like, the profits from one business get reinvested into something else. Sometimes it's real estate. Sometimes it's buying into another business. Sometimes it's like, funding like a new idea. It can be lots of different things. It could be just straight like using the money and putting it in the stock market, or fully funding your retirement accounts, whatever that looks like. But I like the idea of not just having like all your eggs in one basket. And I've seen that, and I have seen people do that, and I don't see it going very well for them.
And I'll just add crypto as well. So that's what I've gotten into as well, as crypto. There's definitely different options of assets and property. We bought property. So we've touched on a couple of those. I just wanted to include that. This has been a really great conversation about, the owner taking the pay in the long term. One of the things that you had said that I wanted to bring up was around, I don't even know if you quite said it, but credit. I wanted to get your opinion on a business credit, line of credit, credit cards, using credit to grow the business. Is this considered good? Is it considered bad? What advice do you have on a business owner who is using credit in their business, or may want to? They may not even be thinking that's an option.
Yeah, I think there's going to be a wide variety of risk tolerance again, and with using credit and where you are with that. And there's going to be some people that you need to know yourself and know if you are a responsible user of credit. And you will probably know that from your personal life. And I'd say that's your number one. Look at your personal life first. If you're somebody who really struggles with responsibly using a credit card, I would probably or if you are responsibly using it, I would say you can probably use it in your business, no problem. If you are irresponsibly using it in your personal life, meaning you've built up lots of debt that you are unable to pay, and no shame on, I'm not trying to use irresponsibly in a way to shame anybody here. But like, if you see that that's something that you struggle with and you don't want that, and you don't like living in a place of debt, then you might want to steer away from maybe using credit. So I kind of want to start there, because you do kind of need to have that like know yourself moment of, is debt something that I can use in a way that use it as a tool and not as a crutch? Because I think that sometimes we see credit cards as a way to get the money you need in the moment without a plan to actually, make more money with that and, get you into like a better place. So, we have crushing debt in this country, like from a personal perspective. There's crushing debt. And I see it in businesses too. There's crushing debt in businesses. And there's always sort of this hope of like, I'll be able to pay it off with this or with that. But if you really don't have a plan to pay it off, I would probably steer away from using it too much. But I like credit cards. I like lines of credit. I will say that. I use them myself. Like, I always use my business credit card. I pay it off every month. It's what I would recommend to really most of my clients that have that comfort level with using credit is put your business transactions on a business credit card. Find one that earns good points for you. So you
And
can
that's
use
the
it for
tool part.
travel.
I wanted to get to
Yeah.
that. So this is
Yeah.
using it as a tool. So
Use it as a tool. The beautiful thing about credit cards is it gives you an extra 30 to 40 days of cash flow. So instead of me paying out money right now for something, like if I were like hire you for your services right now and I charge that on a credit card, like that means that I'm not paying you the cash right now. I'm actually paying it, 30 to 45 days from now.
interest free
For that, because that's like just, that's the month of float that you get with a credit card.
Right.
Now, if I wait and then I pay that, I'm like, oh, I'll pay that in 6 months from now, then it makes your services more expensive to me because I have, those extra months of interest that I'm going to have to pay on that. So I love the idea of using it if you know that you have the cash flow to pay it off monthly and you pay it off regularly. You pay the full amount due, not this payment situation where they give you the minimum payments. I mean, this is going back to like, credit card usage 101. If you can't pay it, if you can't afford it, don't put it on a credit card.
Right. I think of it as another bank account, right?
Yes.
Like it literally, and then it gets paid off.
Yeah.
And I do the same thing and I do it for points as well.
Yeah.
And it's also clean on the bookkeeping. I guess if you had one debit card and one checking account, it would be clean. But to me, it's like everything goes on this recurring charges, anything that I have to pull out to pay for goes on this one credit card.
Yep. I love it for that. There's some really awesome like business credit cards. And then also, there's also good services too that are kind of like streamlining business operations. Like I just have some clients who just started using Ramp, which is like a credit card. They can charge on credit cards and then it will actually like ping your employees. Like if your employees have cards, it'll ping them to be like, hey, we need a receipt for that. And it'll send them a text message so that they can like, if they're out to dinner or whatever, and they forgot to take a picture because they're traveling, they can take a picture, upload it into the system. And so it kind of has this like receipt capture, component as well, as along with the, categorization of all the expenses. So there's a lot of good like fintech options now when it comes to businesses and credit card charges. But yeah, I always think about like, if I don't have the cash to pay for it, I don't put it on a credit card.
Yep.
That's kind of like my internal philosophy. And I try to have that for my clients as well. So we can pay it off every month in full. And then lines of credit, I love. I think that lines of credit I think of them as a cash insurance policy. Is really
I like
what I think
that.
of it as. It's kind of like you get a line of credit, you get approved for a line of credit, and I always recommend people to get approved for a line of credit when you don't need it.
Right.
Because it's much easier to go to a bank and get access to cash when you don't need the cash. It's really hard to go when you have no money in the bank.
And you're going to the same place saying, hey, can I have a line of credit? And they're looking at your checking account like, yeah, I just don't think so, lady.
Yeah. Like if you need, but I need $200,000. And then they're going to be like, why? Because, I need to like float my payroll for next month or like this next week. Like that is a very unattractive offer to a bank. They don't want that. What they want is they want to see that they are investing in a thriving business by offering you tools, and they want to see that you're going to use it responsibly. And if they can see that you have cash, that's more likely for them to say, yeah, this is a, sure bet to give this person, this responsible person who has cash, access to lines of credit. So I always say get credit, get money when you have money.
Right.
And then I mean that as a line of credit. So a line of credit is basically the bank saying, you can borrow money from us when you need it. We're not going to give it to you if you don't need it right now, but you can go and you can quote unquote draw down on your line of credit. So maybe it's $50,000 or $100,000 or $500,000. You can go and use it. This works really well for businesses that maybe like have to buy inventory, You have to buy inventory all up front and then you have to sell it over time. So you might borrow from your line of credit, buy the inventory, but then you're making profit on every single sale. You're going to easily be able to pay off your line of credit. So when you don't have that cash stored up yet in your business, a line of credit is something that you can leverage. Or if you're using your cash for something else, you can leverage a line of credit.
Yeah, absolutely. Up until the last couple years, obviously the economy, interest rates, things have changed a bit. But prior to that, I did get a line of credit when there was cash. But what I'd also do when there was cash in the account is ask for an increase in the line of credit. And I would use it every once in a while and not even wait 30 days to pay it off. I would just be like, it's still active, like I still need it.
Yeah.
And then ask for an increase. And so they would increase it over time. And also I'd ask specifically to the bank, would you reevaluate decreasing the interest rate? Now, I said this in context of this has not happened in the last year and a half, 2 years, but I've had a line of credit for many years, and I would just have it as a recurring task every 6 months that would say, hey, just talk to the bank, see what they could do.
Yeah.
And by doing that, I was able to inch it up to a considerable amount of line of credit, needed it or not. To your point, I didn't wait until I was like, oh, I had X, but I need XX. You don't ask then. It's not going to be available.
Yeah, I think that's a really good point to like ask periodically, because like I just literally got an email from a banking partner that we have today, and he was telling me about this program that they have for women-owned businesses where they can get a preferential interest rate of up to 2% off whatever the standard rate is.
Wow.
So like the bank was actually taking 2% off of the interest rate. So you might be able to like, maybe hit like a program like that. I would also say do the same thing on your savings accounts. Periodically email your bank and say like, hey, is there any additional interest I can be earning? I did that because a lot of us had money in savings accounts when the interest rates were basically 0.04.
Yeah.
And then we all of a sudden had interest, with everything that happening in the economy over the past couple of years, and there was interest to be had in these savings accounts. Those accounts the bank wasn't voluntarily putting, interest onto those accounts, right? You had to ask for that interest. So, this is why you need to have like just either have a phone number for your banking contact or have an email address and just say, hey, is there anything we can do here to like get this account into some interest? So, just looking at that stuff periodically is smart.
I love that. And then I just wanted to speak to my experience as well and have you give your input. I didn't always have business credit. You're a brand new business. Your business entity actually has no credit. And so when I first started out, I identified a credit card that was never used for personal. And I used that strictly for business. It was in my personal name until I was able to start building credit in my business. What are your thoughts on that?
Yeah, I mean, I think that some credit cards will say like, don't use this for business.
Oh, great. I just recorded myself. There we go.
No, but like it's long in the past, Amber. Nobody cares.
Yeah, it's totally gone. So many years ago.
But I did the same thing. I've used a personal credit card for business as well. And nobody cares. Don't quote me on that. I'm a CPA, I don't think. But no, really, I mean, I think we all I think the important part is that you're separating your business and personal. I think that's the more important thing is that you don't mix your business and personal transactions together. But it does take a while to be able to apply for credit. And it makes sense that especially when you're a sole proprietor or you're an LLC, like everything is on just you as a person.
Right.
So even when you go and you sign for a line of credit, what they're going to want is usually a personal guarantee. Most of us, like small businesses, we don't have enough assets in the business to be able to guarantee a loan. So they go back to say like, hey, this has got to go back on the business owner ultimately. So if you default on a line of credit or you default on a credit card or something, like who has the responsibility at the end of the day? So I think like if that's all you can get at the beginning, then that's fine. Like, start there. And then, I mean, the nice part about having a business credit card is that you start to get some of the other perks of you can have employee cards, you can, have like a little bit better, like certain types of points and things
and travel and
yeah. But honestly, I think most of the personal credit cards have just as good of the points, but you get some additional features when you have a business credit card. I don't really see that they're functionally that different.
Yeah. And I also wanted to ask you next, this is kind of like before we recorded, we said this was going to like be Ask Hannah Anything. We didn't have a direct line of theme. So since I have you, I wanted to get your opinion on profit first as a CFO. She's grinning big here, you guys, which means I'm bringing this up because I think we have different opinions, but they're both great. So I just want to hear your opinion on this one.
I have Profit First behind me. It is a book that I have read. When I first read it, I would say I was more enthusiastic about it. When I see it in functionality in the real world, I don't love it for most people.
Okay.
I think it has some merits. I like the idea of making sure that you're always saving for taxes. I actually just did a video on that. My version of saving for taxes is different than the Profit First version and then just for anybody who doesn't know Profit First, money coming in, the top line, money coming in, you separate it out into different buckets and you use that money to do the different things. So you save you save for taxes, you save for profit, you save for owner's compensation, you save for like payroll and then operating expenses. So the idea is that you kind of work your way into having money left over as a profit. My problem with Profit First is that I don't think it addresses if a business has a business model problem. So if the business is not working, it doesn't matter how you're saving money into different buckets, you're just going to be constantly struggling.
And shuffling the money around.
Yeah, you're just going to be like, oh, well, I can't pay payroll. I guess I'll just borrow from this and I'll do this. And like, I guess I'll just pull money from the profit account because that, I need it. I can't cut my expenses any further. So when I say business model problem, I either say I mean how the revenue model is working. Either your pricing is wrong, or you are, you've built a cost structure that's unsustainable. So I think it kind of puts I feel like it can give a placebo effect that people are managing their finances pretty well, but at the end of the day, they're really not having much extra to show for it. And I've seen this in practice where I see people who feel like they're doing a lot because they're moving money all over the place. And it's extremely difficult from a bookkeeping perspective. If you have 7 different accounts and you're moving money all the time and it's always in the same dollar amounts, you're moving money from this account to that account, it can get really complicated. And then at the end of the day, the business still doesn't have profit. And so what was the point?
Right. Okay. So I'm actually really glad I asked that question.
Yeah.
So we're going to assume, I will take the assumption that you have a healthy business model. It is a profitable business. And then once the profits, to me, Profit First makes sense for my brain so much, right? Because the things that you said that don't work, I think happen because it's functionally not working, right? So for me, I'm doing Profit First. I only move money twice a month. There's no shuffling around over and over in accounts. There's no reason to have separate accounts if you have to do that. So I love that you're saying it's kind of what's that saying? What goes in comes out. You can't have anything better come out than what went into the process. And so for me, there's not tons of moving around.
Yeah.
But I can totally see how that's an issue. And I can also see that when people like me say, oh my gosh, Profit First works so amazing, and then it doesn't work for someone else, they're thinking there's something wrong with them, or they're looking in the wrong place. To your point, the placebo. They're like, oh, am I not implementing this process correctly? When it's one layer ahead, it's above. Fix this first. And I agree that is most important to fix.
Yeah. I don't think it's a one size fits all that I think the book kind of says that it can be. I think that's kind of what I struggle with it. And because to your point, because I would say that it would have worked really well for me being a solopreneur when I first started my business. It would have been a really smart thing to do. And so I could see how it would work that way. And I could see how it could work for certain types of businesses. Now, if you get into product sales, I've thought about it because I've had a product business approach me and be like, how do we implement Profit First? And I'm like, just don't.
Right. Okay.
An e-commerce business that's making, sales every single second, how exactly does that work? I think the practical implementation of it where you're making money like throughout the month. It's not like you're getting big chunks of money coming in. Like I think a solo consultant or something like that, it could work really well. Like I actually just was talking to a photographer about this. Like, they're a solo photographer. They have to pay some, expenses and things like that, but they get paid in like big chunks for their projects. Like maybe they do a wedding or something like that. Money comes in, they split it up. Like it works brilliantly. Like I think, it could work really well. But when you start to expand it to different types of business models, it can disintegrate kind of fast, I think.
Yeah. And I can see that going back to our first conversation about cash flow, right? So the first account is just a deposit account. So when you have like an e-commerce making all this money, it's sitting in an account. But if you have cash flow issues, you can't wait till only twice a month to start dispersing out, right? You got expenses going out faster than that. You've got payroll maybe weekly, not biweekly. And so I do see that the more complicated the business, then you're doing these disbursements every week, every couple days, which then can be definitely a load on, the bookkeeping side of it.
Yeah.
The part of the methodology that I liked was that it was a huge mindset shift. So when I shared that I was like, reinvesting in the business, Profit First, that book was whatever I needed to be like, shake me of like, no, like you are owed a paycheck. Like this is like a line item expense. And then you need to make different decisions in the business about how many expenses you have, how you charge, your business model. If you first prioritize that you as the owner need to take, a paycheck, a draw, and or have profit in the business.
Yeah.
And so just that methodology for me shifted how I looked at my finances in the business, which I found really helpful.
Yeah. And I think that is a very healthy part about it, because I think there are like, it kind of goes back to that hustle culture, like mentality, or like, I'm just going to like work really hard and I don't need to take a paycheck. And this is all like working towards something different. Like, I think it is good to think, no, you do need to pay yourself, and you need to pay yourself well, and you need to like prioritize it so that it doesn't become the last thing that happens after everybody else is paid. So I do agree with that concept for sure, because, I think we've talked about it. Like, I think we work too hard to not be paid for this when we run a business.
Absolutely. Before we close out, I have one more topic for us, and I want you to share with us, what would you say to the business owner that just puts their head in the sand, turns their head to their finances, they're avoiding it altogether? What advice do you have about, just taking it piece by piece, getting the help they need, or how important it is for them to educate themselves on the financial aspects of their business?
I noticed that sometimes people steer away from their financials because they'll say like, oh, I'm not a math person, or I just don't understand it, or it feels out of their realm or out of their comfort zone, whatever it might be. And that's usually like, sometimes it's just around like maybe they're, how they're wired, they might be more creative. And then things like spreadsheets and structures like kind of is repulsive to them. They don't even want to look at it, or they're scared of like what it might say. They might have a feeling about how the business is going, and they don't want to actually see, what that number actually is at the bottom, at the end of the day, or maybe what their profitability looks like. I would probably say to that person, like, first of all, like, knowledge is power. Like, if you're feeling like a certain way about your business and you feel like it's negative, that feeling could be true and it could be not true. You don't actually know until you have some kind of like, way and a report to show you actually how well your business is doing. Sometimes people think their business is doing worse than it actually is.
I've seen that many times.
Yeah. And then sometimes it's like, no, it's actually really healthy. And you could be encouraged by that. So you might be, missing out on that opportunity to reduce that feeling in your chest, because we carry that around, that constant anxiety of whatever that is. And then maybe if that's not the case and it is not going well, if you don't have that information, how can you make changes? Like, if you want to carry around that anxiety all the time, that's one thing, but I think most of us don't really want to. So I'd say like knowledge is power. Just by knowing, then you can actually take actionable steps. And then I'd say the other thing is that financials are extremely simple math. It's third grade math, addition, subtraction, if we get into, some analysis, it's multiplication and division. We're not talking about calculus here. We're not talking about any kind of like complicated math. It's, revenue minus cost of goods sold equals this, or revenue minus expenses equals profit. Like, it is extremely basic math. And I think sometimes people think they have to be like, a math person or they had to love calculus in college or high school in order to get accounting. And it's just not that hard. And not to say that like accountants don't have skills, because obviously they do, but like to understand financial statements, it's pretty basic information on there.
Yeah.
And it's just really about understanding like pluses and minuses and understanding the lingo. That's why like I try to really talk without a lot of jargon and I do have videos explaining like a balance sheet and an income statement and stuff too. So watching things like that just to get comfortable with like, what am I looking at? What is revenue? Is that the same thing as sales? Is that the same thing as profit? Like, what is it? And just getting comfortable with the terminology can be really helpful.
Yeah, I was actually going to recommend that too. So I have sent those videos to some clients as well. So we'll make sure we link out to those. I think you do a great job educating the viewers and the listeners on like the language, like you said, the terminology, but you also get into like getting into QuickBooks and like you have this problem and here's how you solve it. And like there's just so much. And that's why I wanted to end this conversation with speaking to the person that might be avoiding finances, that I would recommend. Honestly, your YouTube videos of, from the privacy of your home, you're cooking dinner, prepping dinner, while going on for a walk, like just educate yourself in quick videos that you feel more empowered to ask questions, to make different decisions, to be able to see exactly what's happening in your business. And I'm not saying you need to become the bookkeeper, the CPA, or the CFO. I just want you to get a level of understanding so that you can sit in a chair, hold your own, and then hire the right people that can advise you. But really just having that foundational understanding about your business finances, it literally touches every aspect of decision-making in our business, the finances. Who do we hire? Who do we let go of? What is our pricing model? What are we going to spend money on? There's almost no decision made in the business that does not get tied back to where are we at financially. And so I just want to encourage all of our listeners to get the support they need, bridge that skill gap, feel more confident, and take control back of their business finances if needed.
I love it.
Awesome.
I couldn't have said it any better.
Well, we'll be sure to link out to all these resources. And Hannah, thank you so much for being here today and letting me just ask you all these random questions. You were so good and gracious, not knowing what was going to be thrown at you today. And thanks so much for being here.
Thank you. I really appreciate it. And thank you for everything that you do. It's been just awesome to watch your journey as well. And I know that you've impacted so many people. So thanks, Amber.
You're welcome. Thank you. I have loved having you listen to this episode of the Small Business Straight Talk podcast. I sure hope you found my conversation with Hannah to be encouraging, insightful, empowering, and most of all, moving you to take action, to take control, and to understand your financial health. No change, no change. Without taking action, nothing will change for you or your business. Before we close out, I wanted to let you know that if you are looking to partner with a business coach that can help you strategize, look at your business model, understand how your business model is impacting your productivity and your time management, if you're looking for someone that can help you navigate challenges and be a strategic partner in making those strategic decisions in your business, then we should talk. This is what I get to do every single day for business owners just like you. And if you are interested and want to learn more and to schedule a call to see if working together is the next right fit for your business, then head on over to amberdelagarza.com. Again, you can find out more by heading on over to amberdelagarza.com. If you are new here, I want to just take a moment and welcome you. Thank you so much for tuning in. Be sure you hit subscribe so you don't miss another episode. And for those of you that are repeat longtime listeners, Don't keep us a secret. Share this episode and any of your favorite episodes from the Small Business Straight Talk podcast with a fellow business owner who you think would find it valuable. So that's my Straight Talk for today. Until next time, have a productive week.